Got me falling right back.
Welcome back. In our last video we learned the basics of candlesticks. If you have not yet watched our previous video, we strongly recommend you watch it first before watching this video. And if you have not yet subscribed to our channel, please hit the subscribe button below. You will be notified when a new video is uploaded. In this video we're going to learn the power of candlesticks momentum. This is potentially the most important concept in candlestick analysis. If there's only one thing you can learn from candlestick analysis, we recommend that you learn about how to read momentum. What is momentum? Momentum is essentially a measure of how strong price movement is. Try and answer the following question. Which of the following candlesticks show a stronger upward price movement? Using what you have just learned in the previous video on how to read candlesticks, take a moment to think about your answer. Did you guess the first candlestick? Great job, you are correct. So why does the first candlestick show a stronger upward momentum? Although both candlesticks have the same high and low price range, the first candlestick shows no hesitation in an upward price movement. Also take note that the first candlestick shows a higher closing price. Here is an example of how prices moved. The first candlestick is often called a bullish shaven head or close cropped candle. The opposite of a bullish shaven head candle is called a bearish shaven head candle. But how does understanding price momentum help you make decisions in trading? Let us now look at an example of how shaven head candles can help. Here, we see a bearish shaven head candle that is soon followed by a further drop in prices. If you sold the market after seeing this bearish shaven candle, you would have made a positive trade. Now pause the video and open up your trading charts and take a look. You'll be able to find many similar instances where a bearish or bullish shaven head candle is usually followed by a subsequent drop or rise in prices. It's important that you're convinced of the strong influence of shaven head candlesticks have on future price direction. But why are shaven head candles accurate in predicting the direction of future prices? The answer is because shaven head candles indicate strong momentum in price movements. In the example here, the bearish shaven head candlestick had no wicks because the sellers in the market completely overwhelmed the buyers. The buyers couldn't ride the price up at all. The sellers were too strong. And once the buyers are temporarily defeated, prices will continue to free fall until the buyers can regain their strength and start pushing prices back up again. Are shaven candles 100% accurate in predicting future price movements? No, there are not. If it did, then all traders would be rich by now. Sometimes, shaven head candles are immediately followed by prices moving in the opposite direction of them, as is often the case during the release of certain economic news announcements. All types of technical analysis, including candlestick analysis, is likely to be ineffective during high-impact news releases, such as the non-farm payroll report on the first Friday of every month. I repeat, do not trade during these periods. Shaven head candles aren't the only indicators of strong momentum in the market. There are several other ways to identify the strength of market price movements. However, shaven head candles are one of the most reliable indicators that we have come across. To summarize, I hope you now have a good idea of how momentum works. The main point you should remember is that momentum is like throwing a stone. The stronger the initial thrust, the further the stone travels. In this sense, the larger a shaven candle, the more likely, and further, prices will continue move in the direction of that candle. However, you should remember to ignore any shaven candles on the charts during times when important economic news is announced. As with all other trading indicators and analysis tools, you should never, ever rely solely on candlestick analysis to trade. This means that you shouldn't just blindly enter into a buy trade the moment you see a bullish shaven head candle. Candlestick analysis is meant only to be one criteria out of the many trading criteria you should have in your own trading system. Use candlestick analysis together with your technical indicators or trading method. If you see a bullish shaven candle, but your other technical indicators tell you not to enter into a buy trade, then please don't buy. When is momentum lost? When momentum is strong in the market, it's a good time to enter into a trade. But when do you exit the trade? The answer is when momentum starts to slow down. And as you might have guessed, the candlestick that best shows the lack of momentum is the doji. On the trading charts, a doji looks like a cross, or the letter T, or an inverted letter T, because the open price is the same as the close price. Therefore, these types of candlestick have no real body at all. A doji can represent either one of two things. The first would be, buyers and sellers are equally strong. The second would be, indecision in the market. When the buyers and sellers of the market are fiercely fighting each other, prices may not fluctuate much. This is because both sides are equally strong at that point in time and are caught in a deadlock. However, the moment one of the sides starts to lose strength, the other side will usually push prices strongly in their direction. Sometimes when the market is behaving unpredictably, traders in the market don't know whether to buy or sell. This results in a doji candlestick on the charts because neither buyers nor sellers are strong. In fact, they are both weak. Many Forex books and websites claim that a doji candlestick indicates a change in market direction. Now that you understand the reasons for the formation of a doji, do you agree with what these books and websites say? Not necessarily. Whether or not a doji indicates a possible change in market direction depends on the reason for the formation of the doji. For example, indecision in the market is unlikely to cause a change in market direction. Weak buyer-sellers will not be able to push price in any direction at all. To summarize this video, by now, you should know that long shaven head candle signifies strong price momentum in the market, and that strong momentum is a good indicator of the direction of future price movements. You also now know that a good time to exit your trades is when loss of momentum is observed in the market. A doji signifies a loss in momentum, although this does not mean that prices will definitely reverse in the opposite direction. Never try to predict trend reversals and enter the market based on a single doji candlestick. One more thing about the doji: you may have noticed that the hammer and hanging man candlesticks have similar characteristics to it. So for trading practical purposes, just treat them in the same way you treat a doji. Thank you for watching. If you found this information useful, please share my video with your friends. If you have any questions or suggestions, please feel free to leave me a comment below. And if you enjoyed the video, please hit the thumbs up button. Lastly, if you want videos like this, please hit the subscribe and bell button below. You will be notified when a new video is uploaded.